You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, greetings once again to everybody at Sprott Money News and SprottMoney.com. It's Friday, June the 28th. That means it is the last day of the month. It's the last day of the second quarter, last day of the first half of the year. I am your host, Craig Hemke, and joining us for this special day is Eric Sprott himself. Eric, how are things on your end today?
Hey, wonderful. I'm in Montenegro. It's quite late at night. I had my dinner, having a glass of wine now, and celebrating the week that was, and of course the month that was, which was actually spectacular. So lots of good things to chat about.
No doubt about that, Eric. And before we get started, again, it is now officially summertime. I know it's summertime in Montenegro. It's summertime where I am, and that means it's time for the Sprott Money Summer Sale. You can, of course, find all types of wonderful coins and bullion bars for sale at the SprottMoney.com website. Just go there to check it out. Of course, you can call us at 888-861-0775 for more details and full updates on what we're currently offering. Eric, what we're offering is a lot of stuff that's higher in price than it was just a few weeks ago. Even though this feels like a volatile week because we've given some gains back here late in the week, gold's still up 1% on the week. $13, $14 as we go to wrap up the week, with silver about unchanged. What are your thoughts on the week that was?
Well, you know, it's been spectacular. Right? I mean, I guess we got up to 14.30, and yes, we're going to close around 14.10. It's the end of the month. We had a great month. We shouldn't forget that, okay? To think that gold was up with $135 from 4 odd weeks ago is absolutely spectacular. It's changed everything, the way people look at gold, the way people look at gold shares, hopefully in due course, the way they look at silver. It's been spectacular, and I would guess with the technical strength, with the universal interest, that we should go higher. There's still some things to deal with the commitment of traders and balances, where the commercials have gone quite a bit short. You can see exactly what's transpired this week, but it's not constructive positioning. And of course, the one hope we have is that you get what's called a commercial signal fail, where the commercials all are piling on the short side and they get blown out, which of course we love that. But the jury's still out on that. But it's been a great week.
And it has been an interesting week, Eric, no doubt about that. I wonder what your thoughts are going forward. We're going to turn the corner into the second half, and of course, by the end of July, we'll have that next FOMC meeting where now it almost seems a fait accompli that we're going to at least get our first rate cut. What will you be looking for as the new month begins?
Well, you know, rate cut or no rate cut, the fact is that the Fed's done a 180. Okay? I mean, they were tightening, they were raising, and then all of a sudden the market crashes into the December close there, the December low, and the Fed does a 180. And in fact, not just the Fed. How about the ECB? I mean, they seemed even more ridiculous. Well, we're going to do whatever it takes, okay? Well, man, I only got zero interest rates or negative interest rates, and they're going to do whatever it takes. What does that mean? We get to this thing where, people have money in the bank and they have to pay the bank to keep the money in the bank, and they're going to look for other things to invest in, whether it's bonds or stocks or gold, physical things. All those things lead to people making big decisions. We don't need many making decisions in favor of gold. So 0.5% of people's portfolios today. So if, another 0.5% of people decide they should own gold, you double the demand, but over a very, very short time frame. And I might even point out that, for example, last Friday we put 35 tons in one day into the GLD. I mean, it's a staggering kind of number. And it's just that people are looking what's going on, and if it isn't people, the computers are looking what's going on. And as you know, I've said many times, I rely on the computers more than the people, because computers see what's going on. And they see that gold is technically breaking up. They see the volumes. They see the gold stocks going up. They're blurting out at the end of the day to the portfolio managers, gold stocks number 1, gold number 2, silver stocks number 3. And they have to make decisions. And most of those people would never even think of looking at gold stocks or silver stocks or the precious metals. But that kind of kicking out by the computer tells them to start looking at it, or at least take some action. And of course, as we know, between the algos and other machine-oriented decision-making processes, alternative intelligence, things like that, people go there. So we've seen a lot of action, and I suspect it's likely to continue here.
Eric, I want to ask you a couple of the questions that have come in this week from folks, Sprott Money customers, but other folks that just follow us in these weekly conversations. You mentioned the GLD and how it added 35 metric tons last Friday to its portfolio of allegedly gold, though we can probably debate that as well. But they added 35 metric tons last Friday, which was the biggest one-day addition since 2009. One of the questions we had this week was from someone who wanted to know would you ever consider taking a big pot of money and buying a whole bunch of one of your the old Sprott funds, the PHYS or the PSLV, to add a whole bunch more metal to those funds. Does that ever cross your mind?
It does cross my mind. One of the things I did, I think it's 2 weeks ago now, is I put another $10 million in the Sprott Physical Silver Equities Fund. So not the Silver Equities Fund, because as you know, silver's been underperforming gold, but I think silver is going to blast. It's just going to blast. It would take so little money. It's kind of surprising to think about, the 35 tons, which is like $1 billion into the GLD for that one day.
Right.
$1 billion into silver. Oh my God, it'd be incredible. And I think it's going to happen. And I think about it all the time. And I think about buying, I think about buying the Sprott Silver Physical Silver Fund. I haven't yet. And of course, the reason I probably haven't yet is because there's a little more torque in the equities. And I have bought quite a number of equities here. I probably bought 5 different placements of $20 to $25 million in the last 2 to 3 weeks. Some are probably still to be announced, but there's been a few announced already, because I think that's where the leverage is. And of course, I'm looking for companies that are having trouble, or all of a sudden the price going to 1,400, they're out of trouble. And things are going to get better in a big hurry here. So, and I do think about buying those funds. I may yet buy the Silver Equities Fund, because I think silver is like flying to go here. It's just it's incredible that it's done so poorly. And yet, when I look around to find silver equities, they're the toughest thing to find. And
right.
Yet, so why don't you just buy silver, right? I mean, there's so few equities. And it's not that they're at poor valuations, because they're never at poor valuations because there's so few of them. That's not to say they don't get to exotic valuations, which they typically do when it runs. But I do tend to believe that the silver price will be, I think I mentioned last week, $90 to $550. I actually give that some credibility. So fine, let's think about how we deploy our money in that area. And as I said, I already bought the Sprott Silver Equities Fund. I haven't bought the Physical Silver Fund, but believe me, it's front of mind all the time right now.
All right. Well, then just one other question for you, Eric, and then we'll begin to wrap up. But another great week in the shares. As you began to tell us several weeks back that the highly leveraged, the senior miners would take off before anybody else in the early stages of a bull market, and that's been right. And a big producer like Kirkland Lake has done really well as of late as well. Another company, though, that you've mentioned prominently is Walbridge, and I know they have had very well-publicized and interesting press release this week, and so the question that was sent in was just any further comments you might have on Walbridge.
Well, I found it very funny because they put 3 press releases out the same day, which was Friday, and of course I get on a plane at 10 a.m. in the morning Eastern time, and the first release is out saying they got the next 2 coming out. I'm on my way to Ireland by the time I get down, and the market's closed, and I'm looking at these press releases, and I'm going to tell you, for a guy who's a chartered accountant, and for all the information they give you, it's very complex. And at first reading, I wasn't sure exactly what I was supposed to think, and I probably spent 4 hours now looking at those press releases. Okay, where's this hole? Where's that hole? What does this mean? What does that mean? And some of the interesting data points that they said was that they had 900 meters of structure going this way. They got 800 meters of structure going that way. They found gold in the sediments. They have a 960-meter hole that, for the most part, had gold throughout the whole hole, without it, but it's not assayed yet. That had 5 visible gold intersections. They had another one that had 7 visible gold intersections. And I look at these things on the maps that they have, and I'm like, oh my God, if those things run, this could be one of the greatest things of all time, because the dimensions, the 960-meter core length is about probably 600 meters of width, not strike. They already said the strike's 2.5 kilometers. Now we're talking about width, and of course we know the vertical is for sure over 400 to 500 meters. So this thing's kind of shaping up that it could be something very dramatic. We just don't have enough known assays to say, but it looks quite impressive, to say the least.
Well, all right, my friend, let's, as we wrap up, like we mentioned, the first half of the year is over with, and it has been quite a first half of the year. Just any thoughts on your mind as we enter the second half and then begin to look forward to next year?
Sure. Well, we're seeing all sorts of signs of the economy being weak. And we saw the consumer confidence plummet this month. We've seen kind of punky new home sales. Car sales, I'm sure, are not holding their own. There seems to be Chicago PMIs. We're seeing so many signs of weakness here, including, of course, the 10-year bond trading down around 2%, which is telling you that, hey, it's not nearly as optimistic as everyone thinks here. So I think we're in a wonderful position where the Fed will act. I think the Fed and the ECB and other central banks will have to act irresponsibly, which they're quite accustomed to doing, which will tell everyone you have to own precious metals here, because this whole system of printing money and negative interest rates is not conducive to people having their money in fiat-type instruments, but better to have the real thing. So I think the outlook is brilliant for gold. We've had a tremendous month and a half here, and I'm very pleased that it held up this week, because we got up to 1430, went down to 1400, and I think it's probably going to close here around 1410, which I regard as very, very constructive. So, hey, who knows how far. The article I referred to 4 or 5 weeks ago said gold's going to 1450 for sure on the count, but probably goes to 1650. And I just keep asking people, keep thinking about what that means to stock valuations if gold goes to 1650. It'll just be absolutely outstanding. So let's leave it at that.
Well, all right, Eric, we will leave it there, just as you said. And again, before we go, I want to remind everybody, one of the things we do every month here at Sprott Money is our Ask the Expert segment. And as part of that series, the episode for July will be with Danielle DiMartino Booth, who is a one-time advisor to the Dallas Fed. And this will be your chance to interact with her. If you have any questions that you'd like to ask, just email them to us. It's submissions, the word submissions, at SprottMoney.com, or you can tweet your questions to us at Sprott Money as well. And we'll try to work them in when we record that segment later on in July. For now, it's time to sign off. Eric, I hope you have a great weekend, and we'll look forward to talking to you next week.
Well, Greg, I'm here in the heat wave in Europe and enjoying every minute of it, so I'll look forward to chatting on Friday.
Sounds good to me, my friend. And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening, and we'll talk to you again next Friday.